Hello. The speakers are about to arrive, so please keep quiet, everybody, and stay in your place. That's your favorite topic.
Guys, please be silent. The speakers are about to come into another 2 minutes. Distinguished guests, members of faculty, and my fellow future managers, a very good afternoon to all. Welcome to the first day of Conventus 2016, the annual management conclave of IMI New Delhi. I, Anuj Bansal, and my co-compare Neha Joshi will take you through the session of Finance Club of IMI. This year, Conventus is structured around the theme Transforming Corporate India, Transcending Innovation Towards Strategic Sustenance. India today is in uncharted waters with never seen before growth in the business world, and with the increasing number of startups, SBUs, and subsidiaries adding to the burgeoning number of businesses in the country. Innovation is no longer sufficient for any business to survive, let alone to be able to thrive. Corporate India needs to strategize its vision for the future with sustenance in mind. With a multitude of companies now offering the same product offered earlier by just a few, it is understandable that the life cycle has considerably reduced. However, this shouldn't be taken as an excuse to give up, rather as a challenge to overcome. All that needs to be done is to strategize the corporate world in whichever way it suits businesses such that they transcend beyond innovation and enter into the realm of strategic sustenance. Hence, the industries should prepare for the long term survival in today's fast changing and constantly evolving market space. Before we proceed further into the session, let us have a look at the Conventus video.
topic for discussion in this session is transforming the Indian financial system for sustainable development. With growing momentum behind efforts to link finance policy and sustainability across the world, there's no time to lose in India. Over the next 5 years, India faces one of the world's biggest challenges, ending financial untouchability for 100 million families, bringing clean and affordable supplies of water and energy to all of its 1.3 billion inhabitants, and investing in the enterprises that will provide livelihood for an extra 10 million job seekers each year. Fixing financing needs incrementally in a piecemeal manner would not be sufficient in the context of scaled up targets. There's a need of a paradigm shift which would come from creating a sustainable framework for the financial sector that would change the rules of game for the financing institutions and create the appeal for sustainable financing. Harnessing the power of financial innovation could be the key here. The role of green ratings, peer to peer lending, green bonds, infrastructure investment, trust model, guarantee and credit enhancement mechanisms, etc., needs to be explored in order to draw in private capital for the sustainable development. To give us more insights into this topic, we are honored to have amongst us five very eminent personalities. Balachandar, Mr. Mr. Bimaldeep Singh, Mr. Manoranjan Sharma, Mr. S.K. Zuchi, and Mr. Sanjay Kumar. To give us more information on today's session, I would like to now call upon Ali and Smriti from the organizing club to make a brief presentation on the session.
Esteemed panelists, respected faculty members, and fellow future budding managers. I, Ali Rizvi, along with my colleague Smriti Singh, on behalf of the Finance Club, welcome you all to the Finance Summit of Conventus 2016. Now, we would like you all to see the video of our Finance Club. As we all know, the panel discussion will revolve around the topic transforming the Indian financial system for sustainable development. Now, Smriti shall talk about the present scenario of the Indian financial system and the challenges it faces.
To achieve the objectives of sustainable development, India has a huge pipeline of investment projects encompassing critical sectors like sustainable agriculture, clean energy, efficient buildings, mass transit, smart cities, clean water, and waste management. However, unlike many other developed countries, Indian corporate sector is yet to make a significant mark in these sectors, the prime reason for which is financing challenges. The discussion aims to address challenges like increasing access to multilateral finance in order to plug the fiscal gap in sustainable development related expenditure, improving private participation in financing infrastructure projects, and implementing weather based insurance schemes in a better manner. Moving on to the next topic, responsible banking. China faces urgent environmental challenges such as climate change, habitat and biodiversity loss, air and water pollution, water scarcity, and desertification and erosion. In 2007, China's Ministry of Environmental Protection and the China Banking Regulatory Commission jointly announced the Green Credit Initiative, under which the environmental performance of loan applicants must be taken into account by the bank. Loan applicants with poor compliance records are required to pay higher interest rates, and serious violators are denied credit. The guidelines also show the banks how to integrate sustainability thinking into their lending cycle and will be applied to all lending, both domestic and overseas. Sustainable finance instruments such as environmental regulation and standards are important tools in providing incentives for sustainable development in any country or region. The next topic of discussion would be the role of green bonds to draw in private capital for sustainable development. A green bond is like any other regular bond, and the money raised by the issuer is earmarked towards financing green projects, which means assets or business activities that are environment friendly. Such projects could be in the areas of renewable energy, clean transportation, and sustainable water management. With the focus of foreign investors towards green investments, it could also help in reducing the cost of capital. In 2007, green bonds were launched by few development banks such as the European Investment Bank and the World Bank. Axis Bank is the only bank which has launched green bonds amounting to Rs 1000 crore in the year 2007. In order to leverage effective green bonds, few steps can be implemented, like removal of withholding tax on external commercial borrowings, which is currently set at 5%, and extension of cash reserve ratio benefits as in some incentives.
The next topic would be infrastructure investment trusts. The infrastructure investment trusts are trusts that manage income generating infrastructure investment assets. INVITs can invest in infrastructure projects either directly or through a special purpose vehicle. In case of public private partnership projects, such investments can only be through SPVs. INVITs are regulated by the Securities Market Regulator in India, the Securities and Exchange Board of India, and are expected to encourage higher foreign investments in the Indian financial sector, whereas reducing the burden on the banking system as well as allowing developers to unlock the tied up capital. The next topic would be peer to peer lending. It is a method of debt financing that enables individuals to borrow and lend money without the use of any official financial institution as an intermediary. RBI has proposed registering P2P lending platforms as NBFCs. There are around 30 startups in the P2P lending business which are working in India. Money has to move directly from the lender to the borrower without any escort account. Now, there are certain advantages to it. There are the loans generate income in the form of interest, which can often exceed the amount of interest that can be earned by traditional means. Gives borrowers access to financing that they may not have otherwise if they have gotten approval for by standard financial institutions. The next would be Asset Quality Review RBI Guidelines. A special inspection was conducted in 2015-16 in the August-November period, wherein big sample size large borrower accounts were inspected to check if classification was in line with prudent norms. If not, banks were asked to treat them as non-performing. The need would be, it is much needed as the asset classification was not being done properly and the banks were resorting to evergreening of bonds. They proposed bad loan classification. The impact was record losses in Q4 of financial 16 by many large lenders like Bank of Baroda amounting to 3,230 crores, Punjab National Bank amounting to 5,000 crores, IDBI Bank amounting to 1,300 crores. The doubtful assets attracted 40% provisioning under these guidelines. If loan was not serviced, banks have to treat it as a loss account with 100% provisioning. Thus, we can see that how inevitable and integral it is to transform our financial system to cater to our sustainable development needs. We hope for an enriching discussion. I would now like to invite Anuj and Neha to take the stage over.
Thank you so much, Ali and Smriti. Now, since we are in such august company, I would like to take the privilege to introduce each of our panelists to you people. Our first panelist is Dr. Manoranjan Sharma. Dr. Manoranjan Sharma, he is the general manager of Canara Bank. He holds a first-class bachelor's degree, first-class master's degree in economics first class postgraduate diploma in business management, and a PhD. He has over 300 publications, including in the Business Review, Cambridge, occasional papers, RBI Mumbai, Bank Quest, Cap Calling, Professional Banker, Analyst, Yojana, The Indian Banker, the Economic Times, and Business Line. He has presented papers at several national and international conferences and delivered keynote addresses at various universities. He has widely traveled both India and abroad. Dr. Sharma has made presentations and chaired sessions at conferences organized by Marcus Evans, Malaysia, Terrapin Private Limited, Singapore, Naseba, Paris, Max Planck, West Germany, Indian Institute of Science, Bangalore, and World Association for Sustainable Development, London. He was the keynote speaker at the International Conference on Frontiers at Infrastructure Financing, IIT Kharagpur, in the month of November 2014. He was also a panelist at 4 International Finance Conference at IIT Kharagpur in the month of November 2014. He was a discussant at the International Conference of Housing, Financial Stability and Growth, jointly organized by IMF and IIM Bangalore in the month of December 2014. His book, Global Economic Meltdown, and 5 edited books, that is, Leading Issues in Indian Economy, Studies in Money, Finance and Banking, India's Transforming Financial Sector, Dynamics of Indian Banking, and Indian Economic Policies and Data have been widely acclaimed. His views have been cited in the Parliament, the Associated Press, New York, Dow Jones, New York, International Herald Tribune, New York, Wall Street Journal, New York, and the Economic Times. Sir, we are privileged to have you with us today. As a token of our respect, we would like to present you with a bouquet. And may I please request Professor Barnali Chakradhar to kindly do the honors? We welcome you, sir.
We welcome you, sir. Our next panelist is Mr. R. Balachandra. Mr. Balachandra is a fellow chartered accountant and a management graduate. He has over 20 years of experience in conducting management advisory assignments and audits, mainly for large corporates, both in the private and the public sector. His core industry specialization is in the financial services sector, that is, insurance, banking, mutual funds, AMCs, and term lending financial institutions, etc. His international experience includes short-term secondment to the insurance group of Ernst & Young, UK. He has earlier worked in London for 1 year with a leading city-based accounting firm specializing in insurance. He has also provided expert financial management inputs for a management consulting assignment in Dubai. Mr. Balachandra is also the IPO leader for EY India and is extensively quoted by the media on IPO-related matters. In addition, he heads corporate services for EY India. We are privileged to have you here with us today. As a token of our respect, we would like to present you with a bouquet. May I request Professor Prashant Gupta to kindly do the honors.
We welcome you, sir. Our next panelist, and it gives me great honor to introduce him, is Mr. Bimaldeep Singh. Mr. Bimaldeep Singh is an alumni of IMI. He is a senior banker, having worked in financial sector for the past 15 years. He currently works with Deutsche Bank AG India as a director and senior relationship manager in the corporate and investment banking team covering large Indian conglomerates, including Reliance MDA Group, Tata SR and SL Group. Before moving to banking, Bimal has also worked with the leading Indian corporates, including Reliance MDA Group and the SL Group, and has helped these institutions raise large ticket project financing for their various group initiatives. He is based in Mumbai. Sir, we are privileged to have you with us today. And as a token of our appreciation, may I please invite Professor Sanjay Dhamija to kindly do the honors and give the bouquet to you. We welcome you, sir. Our next panelist is Mr. Sanjay Kumar. Mr. Sanjay Kumar is the Senior Director in Deloitte, India. He is responsible for transfer pricing, advanced pricing agreements, mutual agreement procedure projects, and tax policy initiatives, including on BEPs. He has master's degree in economics from the State University of New York, Stony Brook, USA, mathematical tripos from the University of Cambridge, UK, and a master's degree in physics from the University of Delhi, India. He is a member of INTAC and a prestigious Indian Institute of Public Administration. Mr. Sanjay Kumar was earlier with the Indian Revenue Service and took voluntary retirement as a Principal Commissioner of Income Tax in 2015 after 28 years in the government. His last assignment in the government was the Secretary of Tax Administration Reforms Commission. Earlier, he worked on many key assignments, including Commissioner in the CBDT, Ministry of Finance, and Regional Commissioner for International Taxation and Transfer Pricing. He was also a member of the 5 dispute resolution panel at the different places in the country. He was on many expert committees of the government, including in committees on black money estimation and revenue forecasting. He is an IMF impaneled tax administration assessor and has done international consultancies on tax reforms. Mr. Sanjay was India's trade negotiator for 3 years at the WTO in the areas of IPR, SPS, TBT, and trade and environment. He also participated in a number of bilateral trade negotiations. Mr. Sanjay has been a senior fellow and adjunct professor of public policy at Duke University, USA since 2007, teaching courses on international tax and transfer pricing. He has published a number of papers on tax, transfer pricing, trade and industry issues in reputed international and national journals. Sir, we are privileged to have you with us today. As a token of respect, we would like to present you with a bouquet. And may I please request Professor Aman Srivastava to do the honors.
We welcome you, sir. I would now like to introduce Mr. S.K. Zucchi. Mr. Zucchi has an experience of 39 years in the banking sector. His academic qualifications include MCom, MA in Economics, LLB, CAIIB, and professional qualification in Capital Market and Mutual Fund. He started his career with Punjab National Bank in the year 1980, and since then has worked with various offices in the area of operations at ECE House, New Delhi. At present, he is the Circle Head South Delhi zone of PNB, covering over 100 branches. He has also worked at the Shanghai branch of PNB for over 5 years for banking business development and has been working as a head of various companies. He specializes in the field of international banking and has worked as manager and at senior level in rural, semi-urban, urban, metropolitan, and international centers. He has also worked as senior vice president in subsidiaries specialized in corporate advisory services and mutual fund asset management trust for over 10 years. He has also been a part of corporate restructuring and NPA management, apart from specializing in areas of foreign exchange. He has also been the zonal head Bhopal region for a period of 2 years prior to being the circle head South Delhi zone of PNB. Sir, we are privileged to have you here with us today. As a token of our respect, we would like to present you with a bouquet. May I please request Professor Deepak Tandon to kindly do the honors.
Come up. Deepak and me, we have worked 10 years together, so it will be like this. It is on behalf of all my future bankers and future entrepreneurs.
We welcome you, sir. I would now like to introduce our faculty moderator for this session, Professor Deepak Tandon. Professor Tandon is a professor in finance at IMI New Delhi and has 33 years of work experience. He has a PhD in management, finance and banking from Washington, D.C., MBA in finance from FMS Delhi University, LLB from Delhi University, MSc Delhi University, CAIIB from Indian Institute of Banking and Finance, Mumbai. He has been a visiting faculty at SRCC Delhi University, SP Jain Mumbai, IMT Ghaziabad, ICAI, ICWAI, and other allied Premier B schools. He has also taught at University of Luton, Bedfordshire, Sassoon University, Bangkok. He has worked for various banks like PNB Capital Services, Vysya, JNK, IndusInd, and Oriental Bank of Commerce at the level of Vice President, Senior Faculty, Forest and Risk Management. He is an approved ISO lead auditor from Nigel Bohr and Associates, Germany, IRCA certified auditor. He has authored well over 104 research papers duly published in leading international and national finance journals and periodicals. He has also been a chairperson, keynote speaker at various national and international conferences. He has also been a chairperson. He is an editor in chief for Asian Journal of Research in Social Sciences and Humanities and on the editorial board of several journals. He has also authored 7 books in the areas of forex management, strategic management, risk management, retail banking, Indian banking, emerging issues in finance and banking, and has taken several prominent workshops for senior managers at Bank of India, PNB, FEDAI, NTPC, etc. Dr. Tandon has been awarded a gold medal termed Jewel of India Award and Vidya Gaurav Gold Medal Award from Indian Solidarity Council, New Delhi, and International Institute of Education and Management, Mumbai. He is also a recipient of Lifetime Achievement Award from UGC-sponsored RIMT Mandi Govindgarh and from DAV Institution Board, Punjab. He's a life member of the Professional Risk Managers International Association, Wilmington, DE, USA, Kolkata chapter, and an affiliate member of Global Association of Risk Professionals, New Jersey, USA. He has received the Best Professor in Financial Management Award at 22nd Devang Mehta Business School Award in 2014 at Mumbai. He recently published a book titled Management of Banks, Text and Cases from Taxman Publications Private Limited. Sir, we are privileged to have you here with us today. As a token of our respect, we would like to present you with a bouquet. May I request Akash Gupta, Secretary of Finance Club, to do the honors. Without further ado, I once again welcome all the guests and request Professor Deepak Tandon to initiate the session.
Okay, it's okay. A very good afternoon to you all, respected panelists, dignitaries from the corporate world, my dear faculty members, and nonetheless, my dearest students. I welcome you all to this finance summit. A little brief about this, how it went about, is when the topic of the Conventus was given by the students, and very aptly they chose transforming the Indian financial system for a sustainable development. Then the choice of the speakers from the finance club with an able mentor, Dr. Aman Srivastava, finalized all the panelists and the dignitaries who are present on the dais. I know most of them, I met them, I worked with them, and without further wasting the time, I just straight away come to the panel discussion. Being the moderator, let me just tell the panelists the rules of the game. Okay, the rules are very clear that about 15 minutes each they will be given for their deliberations and the knowledge to our students. There will not be any cross firing or any questions in that. Let them deliver their thoughts, value additions, knowledge giving, preachings, and blessings to the students. After that, each and every panel number 1, panel number 2, panelists 3, 4, 5, and in between, I'll keep on moderating it and telling the times. After that, let there be a cross discussion and it will be an open house discussion. And once we are going to wind up, in the end, all the questions which you have for any of the panelists, raise your hand and it will be answered to the justice. In the end, I'll request one of my faculty members, Dr. Barnali, to just sum it up and give a vote of thanks to the panelists. That's how the 2 hours we are going to spend. 15-20 minutes is a good time to just give the deliberations, and I wish all the success to all the panelists for giving all the thoughts. To start with, I'll just give a saying, a quote from Pope Francis. The finance overwhelms the real economy. The lessons of the global financial crisis, which were spoken in the deliberations were done by our learned DG sir in the morning. Innovation and sustainability was the key area. And the chief guest also deliberated on the innovations, ideations, and in the Indian context, he just talked about the Jugaad Academy, right? So in that, uh, finance overwhelms the real economy. The lesson of the global financial crisis has assimilated, and we are learning all too slowly the lessons of the environmental deteriorations. So the key objective is that we have to have a sustainable development, innovations, technological upgradation, and we must have a DMS route. What is DMS? Digitalization, socialization, and the mobile banking. So we'll devise our sessions into two ways. One is the financial system from the banker's perspective. We have two very able, very senior bankers with us. And after that, we are going to have from ENY and Deloitte. There are two again panelists and another from a foreign bank. He is going to give about the energy sector. What is the renewable? What is sustainability? So we sum it up in a altogether total forum of the lines. Just a background which has not been dealt is why we chose this. 2015 has been a new year altogether of a sustainable financial system altogether. We have mobilized the capital. More and more policy innovations came into the capital market, insurance and investments, and a green area was emphasized. We have, corpus also has been allocated US dollars 16 trillion, and second part is the resilience part of it, and the third is your reduction of the externalities. US dollar 5 to 7 million for the infrastructure investments has been allocated by the UNDP report we are talking. And 2016, we have learned the lessons from the 2015, and a year of scaling has been taken up. Green finance strategies have been developed. Just to start, first of all, I would like to call upon the senior panelist, Dr. Manoranjan Sharma, who is a chief economist and the principal of Canara Bank Training Center. He is an economist, he has a balance sheet cell, he has worked, and a lot of years he has spent. Not to just take his time, overview, I have requested him to talk about the various areas, and I'll put him straight away the question, sir. You can just sum it up, would be, first of all, we are seeing Indian banking bleeding. We don't have manpower. What do you think? I'm just giving you the questions straight away so that your deliberations can come up. What are the right set of the people you think would be required for the financial system? Number two, India as on today is on a growth model. We are still hovering into 7 to 8% GDP. We want to go to 10%. How it will be achieved? What are the macro? Despite we have got good macroeconomic indicators. The macroeconomic indicators which are there, GDP at the minute 7.4, forex US dollars $350 million, CAD has come down, the deficit rates are also coming down, fiscal deficit is now par, and a new government policy by the Modinomics, Indianomics, which is coming, has been opened up, has been there. So, sir, I'll request you the second part you can look into. I will not ask you to straight away do the demographic dividends, but the banking sector, potential investment, what are the basically your views that how you tap the young generation for the banking? So just to highlight, we have got a BFSI sector also, and a lot of students are there from the banking sector. This year we have got about 66 students will be taking their prospective jobs into the banking sector. The next question which I will be that how will you repose your high performance companies, corporates vis-a-vis the banking sector? There have been a breakdown in the business sectors. Banks have bleeding, and today's newspaper talk about the mergers of the State Bank group, barring the State Bank of Hyderabad and the other one is the State Bank of Patiala. The others, swap ratio, share exchange ratio, that too 2 is to 22 or something like that. We are doing it. The last question, which if you want to sum up, would be the infrastructure financing, which is there, the triple P model. What are the defects? Why is it not coming up? And in the end, sir, I would request you to tell us something about your views, how to transform the financial sector reforms. I know I have given you a lot to talk about, but I know you can do the justice with your versatile overall experiential summary which you have got from Canara Bank and the board level you have already worked, sir. So I request you to just deliver all your deliberations hovering upon these points. Welcome, sir.
My fellow distinguished panelists, Professor Tandon, faculty members at IMI Delhi, distinguished guests, friends, ladies and gentlemen. At the outset, I'm thankful to Professor Tandon and the organizers for having me here with you. I think Professor Tandon has made my task a little simpler. This is a topic which has huge ramifications, wide repercussions, but as requested by him, I'd focus on certain specified, identified issues. India on a high growth path. Let me try to place this issue in some kind of a proper historical and comparative perspective. We achieved independence way back in 1947, embarked on a process of planned economic development in 1950. The basic objective of planning in India, in terms of the first 5-year plan, was defined as raising the standards of people consistently. Over a period of about 30 years, this central objective of planning could be translated, could be subdivided into 4 basic objectives of growth, modernization, self-reliance, social justice. I think other things are by and large clear, but modernization needs a little bit of elaboration. When we see modernization, when we, apart from the growth, which is a merely quantitative parameter, we also look at certain qualitative parameters, such as the structural transformation of the economy, reflected, for example, in the fact that when we achieved independence, when the planning process was initiated way back in 50s, agriculture used to contribute something like well over 50% to GDP. Over the years, over the course of last 60 years or so, it has dropped drastically, come down to levels of about less than 15%, 13.5, 14% or so. However, this is a process which is not unique to India. Some of you students may be aware that the United Nations consistently publishes cross-country data, time series data, empirical data of, there are about 200 countries of all data. They are available in various United Nations publications. So this process, which is not unique to India, but in India, we find there are some features which stand out in the Indian context. Despite the drastic fall in the contribution of agriculture to GDP, agriculture still accounts for something like 60% of the people are employed. I would not say productively, but they're still engaged in agriculture. Another thing which you find which makes the Indian story slightly different is the fact that in most cases, the process of development has been from agriculture to industry to services. But in the Indian context, we seem to have leapfrogged from agriculture to services. Services now account for well over 60% of our GDP. In the last 2 years, there have been coordinated and concerted attempts, most recent being the Make in India campaign, Digital India, so many such things, increased sharper focus on micro, small and medium enterprises, manufacturing accounts for something like 15%. We are trying to push up to 25% because of high employment elasticity, huge potential for employment. So those things are being tried to be corrected. The other part of the story of India on a high growth path would be that 1991, in several ways, marks a watershed in Indian economy. There were several areas of great concern, areas like fiscal deficit had reached a level of about 12% or so. Inflation, we had runaway inflation, price spiral 12%. Forex reserves, by any benchmark, by any indication, they should be, in all cases, even in what we call worst case scenario, they should be sufficient to meet for our needs for something like 6 to 8 months. They had dropped to an all-time low of about 2 weeks or so. In this kind of situation, perhaps we Indians have a bad tendency. I think there was a story in Economic Times yesterday that we resort to drastic measures only when we had no option. Something similar happened in 1991, and as events bear out, perhaps this was all to the good. So in the last 2 decades or so, India has consistently been an outperformer in the global economy. India and China, you go through any United Nations, World Bank report, reports of the International Monetary Fund, you will find that they emerged as some kind of a global growth drivers. Now that we find that there are several areas of concern to the Chinese economy, recent data from the IMF, the World Bank indicates that India is possibly the largest, fastest growing economy in the world. I'd like your attention here from, I'm not saying the fastest, largest, fastest. There are several economies which constitute a major part of the global economy, and among the large economies, India is certainly growing, with China slowing down. We have the World Bank's statement that with global growth slowing to about 2.5% or so, India has consistently achieved a growth rate of about 8%. This year, we're likely to end with 7.5, 7.6. We had also crossed 8% not too distant past. Before the October 2008 global financial meltdown, global financial crisis hit the global economy on a scale which was unprecedented, a scale which is comparable in many ways only to the Great Depression of 1929, 1930. So this was some kind of the magnitude, the severity of the crisis. Prior to this crisis, if I may jog your memory a little bit, you'll find that Indian economy was consistently achieving growth rate well in excess of 8%, 8.5%, 9%. And that time, the finance minister, Mr. P. Chidambaram, had said that we are very close to achieving double-digit growth. Well, we did not achieve that double-digit, but we came very close to it. Because of the ramifications of the global financial crisis, we were not hit directly for various reasons. I would not go into those reasons. But India was also affected by what we call the knock-on effects. Over a period of time, the GDP growth dropped down. We came to I think 2 years, we came to sub 5% levels. Now growth seems to be gaining traction once again. There are, of course, issues in GDP competition, but that has been discussed and debated at various fora, including the senior officials of the Ministry of Finance, the RBI governor, and other things, even at some international fora. But without quibbling over those points, without going into the merits, suffice it is to say that India seems to be back on growth path. We are likely to achieve 8%, 7.5% to 8%. There are differing assessments of the Planning Commission, Reserve Bank of India, Ministry of Finance, IMF, the World Bank. But by and large, there seems to be a broad consensus that India was well achieving 7%. So the World Bank president recently characterized India as the brightest spot in the global economy. Subsequently, she has reiterated this point of view in several interviews and several other presentations. I think Professor Tandon mentioned to BRICS, that is also an important. I think some of you, some students are very young, but perhaps you might remember that when the BJP government was in power in the earlier of something in 2003, they ran a campaign which was called Shining India campaign. Some of you might remember. Of course, the macroeconomic parameters that time were good. we had some kind of a virtuous cycle, but some kind of a theoretical foundation for this Shining India campaign was provided by a very important path-breaking report of Goldman Sachs. There was one Indian lady, Rupa Purushottam. There was one American gentleman, I don't remember his name at the moment. But they had propounded this theory of what they call demographic dividend, that India is a young country, bound to remain young for the next 30 or so years or so. And so it is going to reap the benefit of what they call demographic dividend. The young people would be a great asset, and I'm very happy to see so many young faces here in the crowd today. But in all these discussions and debates about the demographic dividend, BRICS report, Shining India campaign, perhaps we missed some elements. I would dare say some very important elements of the story. Perhaps we have an unfortunate tendency of picking up, grabbing headlines, not going into finer, granular details. And if you go into granular details, if you do for some kind of what we call a fine print analysis, you'll find that even in the BRICS report, towards the last few pages, the entire report was about demographic dividend, the kind of place India is likely to occupy at the high table in the global economy. But they also, if you would have gone through the last few pages, that they also highlighted some important areas of concern. And to their assessment, unless those areas of concern would be addressed, India's demographic dividend, and this is my phrase, could well turn out to be a demographic disaster. I say demographic disaster because even the BRICS report highlighted areas of concern such as health, education, and employment. These are areas of great concern. They have been areas of great concern for the last 50 years. Perhaps we have made some headway in this area, but not enough. Professor Tandon also asked me to refer to the banking sector. There's been a great deal of concern about the present position of banking sector. There have been issues of rising NPAs at the industry level, what we call in the terminology of the Reserve Bank of India, scheduled commercial banks, that means banks which are listed in the second schedule of the banking RBI Act. The gross NPS level has jumped up to well over 10%. There are issues of capital, and in terms of Basel requirements by March 19, banks, of which public sector banks, require capital infusion to the extent of about 2 lakh crore. Last few years, there have been some capital infusion through budgetary means, 25,000 crore this year, 20,000 crore. But obviously, given the scale and the magnitude of the problem, this is woefully inadequate. These issues have been well highlighted, but banking sector is some kind of a microcosm of the broader economy. And we do maintain, having seen things firsthand in the banking sector myself, discussions with large number of bankers and other financial experts, we do see light at the end of the tunnel. We are going through a difficult phase, certainly, but I'm confident that with the kind of coordinated and concerted efforts being made, the banking sector will go places. It will take some time, it will take some doing, but we will be there. I find a lot of younger students, some of them might have some interest in banking in the financial world. I'm reminded of moving lines of William Wordsworth, written possibly 200, 300 years ago. Bliss was it in dawn to be alive, but to be young was very heaven. So all of you are young, all of you are in that sort of what Wordsworth characterized as some kind of a heavenly position. The banking sector, the financial sector is in a strong and robust condition. There are areas of concern, certainly, but there is no reason why going forward we cannot address these areas of concern. We have done them, we have addressed these areas of concern in the past also. For example, in the wake of the wide-ranging economic reforms process initiated way back in 1991, some of you who have some historical bend of mind, you do some kind of a data analysis, you'll know that the gross NPS level had jumped up significantly. Most banks were forced to post losses, but we did come out of this position. The gross NPAs at that time 91 reached a level of something like 15%. Our ROA, return on assets, has dropped to a level of 0.15%. 3 years back, our gross NPAs had come down to a level of less than 5%. At the industry level, our return on assets had reached the international benchmark of above 1%. Since then, in the last 3 years, because of the downturn of the Indian economy, because of the asset quality review, because, if I may say some plainly, something like the 2G, 3G, the policy paralysis which characterize the government at the center, there's several reasons. So things have taken a hit, but obviously correcting them will take some doing, but we are on the right path. I think we'll overcome these issues. Mergers of acquisition in the financial sector, banking has been much talked about. There are issues of economies of scale, economies of scope. Most banks are on identical technological platforms. There are two basic tech, FlexCube and Finacle. Banks are on the one on the other technology. So, but there are HR issues. There are issues of distinctive culture each bank has. So the basic justification for merger stems from the fact that we don't find any bank in the top 100. There is a very respected publication from London, The Banker, which publishes in January and July every year the list of top 100 banks. To our dismay, we don't find any Indian bank. With the present process of mergers and acquisitions, a greater thrust on consolidation of banks, I think we'd shortly be there. But let me submit that mergers and acquisition, consolidation in banking sector is not a panacea, is not a one-off kind of a thing to address all ills of the banking sector. For that, separate attempts should have to be made. Focus attempts should have to be made. Infrastructure model, banks have played a very significant role in infrastructure development last 10-15 years. The kind of infrastructure development you find across the country, in most projects, banks have a significant role to play. But this is again something which we find makes India's position distinctive, somewhat unique. If you look at the position of countries, there is absolutely no dispute on the fact that infrastructure is a basic prerequisite of development. However, there are wide differences of opinion on how to finance this infrastructure development. If you go through the data analysis of various countries, you'll find that in very few countries of the world, banks have financed infrastructure development to the extent which you find in India. Mainly this infrastructure development would have been financed in most cases through what we call term lending institutions. We had some kind of a similar situation in India. If you go through old annual reports of IDBI, these institutions were characterized initially as what we call DFIs, Development Financial Institutions. And it was their mandate to focus on infrastructure development, large projects, capital intensive projects such as, say, let us say steel, iron, some such things. But because of this ongoing process of economic reforms, for example, even in IDBI case, there was a reverse merger with IDBI Bank, and for various reasons, there have been a focus of all the banks on the retail banking because the risks are diffused. The level of defaults and delinquencies is much lower. Whereas, for example, if a housing loan goes bad, let us say if you take the example of a bank like Canara Bank or a PNB, even if you take a city like, let's say, Delhi, we find that the average ticket size of a loan is something like 30 lakhs. So if the ticket size is 30 lakhs, that means the value of the property, because we have this concept of what we call LTV ratios, loan to value ratios. No bank will give you the loan to the full extent, possibly about 80%. So that means if the value of your property is about 40 lakhs, you'll get a 30 lakh loan. We have collateral to back it, and there are other factors which make India's position slightly different, so that the kind of financial crisis which occurred in the United Nations way back, United States way back, will not occur. There are various, for example, if I may speak a little plainly, here there are strong emotional reasons. without any gender bias, let me say that most houses are run by the women of the family. And in the Indian context, what we find is that by and large, there could be, of course, occasional differences. The females, the women have a very strong attachment to gold and house. So unless things completely out of hand, the lady of the house will not agree for a house to be mortgaged. Then there are several other factors. So housing has not. Okay. So infrastructure model, but banks are not the right medium, because banks basically have a lot of short-term funds. We have funds in what we call CASA funds. So this causes a huge mismatch in terms of assets and liability. This causes a maturity mismatch in what we call the language of the risk management. We have done our bit. Going forward, there are huge expectations from us on the infrastructure sector. We are still doing, but my submission to it that there are definite limits to what banks can do in infrastructure financing. There are other areas of concern. We have distinguished speakers on banking sector, other sector, and I'm sure they will carry it forward. Thank you very much. Thank you.
Thank you, Sharma sir. In fact, he has given you everything on the banking sector. The takeaways are too many. Now, keeping this pace forward, I would still invite another very senior banker from Punjab National Bank, Shri S.K. Joshi sir. And my question, sir, deliberations, inputs to you as a moderator would be, what are the dynamic changes in the Indian banking sector which are taking place at a very fast pace? From 2014, we had about 45 banks. And 2016, we have got legacy banks added, more 45, universal banks, 2 more added, payment banks, more added 11, small banks 18. So now we are 66%. So every 2 years, we are seeing a transformational change and 45% increase in the banking sector. With, I think Sharma sir also agrees that the mid-cap banks will be burnt out in the game. That is one of the things which is there. Now, my question to you would be, what has led to this triple R concept in the Indian banking sector? The triple R would be the robust banking, the responsible banking, sustainable, and the resilient banking. So that, number 2, sir, I would like you to share with the students your experiences. You have spent a very, very long time at Shanghai. So what are the Shanghai banks? China. Let's come to the straight away the statistics, which is there. China is number 2nd, India is number 9th. When we compare the triple P, the purchasing power, it is number 1, India is number 3rd. When we talk about the global wealth, China is 16.08, India is 23.16. And when we combine both the GDPs, everything, the total triple P, India plus China becomes 52.77. And as I was undergoing all the Harvard YouTubes with Chanda Kochar, Raghuram Rajan last night, I found that Indian banks are faring much better than the Chinese bank, because the debt component in the Chinese bank is too big. I had problems presenting a paper in China last year, October. I went to a small village of China, that is Chengdu. We had an Indo-Shuaishan University. That license also you can touch, so that the students have a feel of the international experience. Last question would be a very simple one. In your opinion, what are the various challenges which the Indian banking sector should take a forward leap for a sustainable economic approach? Welcome, sir.
Thank you, Deepak. Very distinguished and respectable panelists, respectable faculty members, and my dear students. Deepak, if you permit me, I will start from the last question. And my job will be easy. Friends, I am a practical banker, student of economics. I will give you the practical banker view. Because theoretical books and all that you will read more than enough. But what the bankers see in my 39 years of banking, right from rural bank to international bank, where I have seen the crack of the problem is, I will be discussing with you. I will not go into economic jargon. I will go to the direct banking and direct simple words where the problem lies and what are the challenges. Just 2 minutes I will speak on the financial sector. From, see, layman view, what is the financial sector? Financial sector has three components. One is the supplier. And who is the basic supplier? It is the banks, financial institutions, insurance, non-banking finance companies, all those together which are putting finance or some financial input into the market. Second part of the financial sector is the components, which is called the products. What are the products? We fund people, we take deposit from people, and we provide them various services like insurance services. We add so many other now mutual fund services. These are the products which are available in the financial market. And third is the services part, where these services are provided in the financial sector. What are those services? Two of my very distinguished panelists are there, the consultants, the legal people, the brokerage companies, rating companies, which are providing the supporting services to take the financial decisions. This is where the entire financial sector lies. Then I come to the specifically banking sector, because the larger part of the financial sector is driven by the banks. Pre-1969, that is pre-nationalization, what was the characteristics of banking? They were simply class banking. They were servicing specific people, specific targeted people only. After nationalization, and particularly after 1999, when the government liberalized the banking sector, it became the class banking. From class banking, it became the mass banking. The entire people were covered. Poorest of the poor was connected to the bank. You have a question? Yes, not fully. But the banking doors were open to those also who were have-nots, who were not wealthy people, who were not really people who were earlier target of the banks. And present scenario, at present now, what we see in the banking and financial sector, it is banks are open for privatization. As my friend Deepak said, more and more banks are mushrooming from private sector. Then globalization. We are going abroad. Foreign banks are entering our economy. The Indian economy, they are opening all the major sectors, including banking, for the global world. And these days, what you are reading and what you are more worried and concerned about is what my earlier banker colleague said, that is consolidation. Now we are going towards consolidation. Nothing to be worried. These are different phases of the economy where you revolve the economy. The phases come and phases go. It is only the decision what the governments take, the monetary and the fiscal policy takes to make the economy more vibrant and to see that the financial sector is ready to serve the industry, ready to serve the economy for their targeted goal of the economic development, what they target, how much growth we should achieve. Come to the challenges. At present, the biggest challenge to the banking and financial sector is liberalization. How much liberalize? Whether domestically we should liberalize, internationally we should liberalize, in a protective environment we should liberalize, or it should be open economy. Some thoughts you must have given to the current account convertibility, capital account convertibility. So many questions are there. For last 25 years, I am finding they are unanswered. Though they are addressed to a certain extent, but they are unanswered, not fully covered up. This is the biggest challenge, because we want to bring more and more people under banking umbrella. We want to reach the financial sector to each and every household. Earlier, entire industry was under the government umbrella. Now the government, don't have that much capital. They don't have that much of the funds and resources. Now they have to totally liberalize it so that it gives the maximum to the economy. Second important challenge is deregulation. Banking is totally regulated economy. We, right from issue of a opening of a bank branch, transacting of a bank, their international operations, their funding, their lending, entire thing is regulated. So in this regulated environment, how much deregulation should be there? It is a very crucial debate going on in our monetary authority, Reserve Bank of India, and the Finance Ministry, how much they should provide the deregulation, because deregulations have danger marks also, because sometimes they are abused and they are misinterpreted, and you feel so many frauds, so many misappropriations, so many different sort of economic embezzlements you read. So you must be reading in the newspapers almost daily. We have one or the other such type of a incident where we feel that certain regulations have to be put on. Third important challenge is globalization. As a practical banker, biggest hit what we have found is because of the globalization, acceptance of Basel norms. You all must have read about the Basel. The entire banking industry has changed. We have what Mr. Deepak said, bleeding balance sheets. They are because of the stringent global norms which we have put on in the banking industry in India. We were not prepared. The entire banking industry in India was protected by the government because it was a government-owned bank. We had a very, very minimal capital base. But after adopting the Basel norms, all the banks in India, they have to follow the global norms, capital adequacy norms, risk weight norms, which were not suiting to the Indian banking sector, because our base was not in a commercial or what I should say, professional lines. It was purely a social banking. It was purely a government-driven banks. So this is the biggest challenge. Now Basel III, 2018, 2019, we have to make a drastic changes in our risk profiles. And you must be remembering that the newspapers, they say entire banks require at least 1.5 lakh crore rupees as a capital infusion from the government to survive, which is a big challenge at the present moment. The governments, they don't have that much surplus funds to put into the banking sector, which is hampering the growth of the banks, which is hampering the functioning of the banks, particularly the lending side is so much affected, and it has direct impact on the slow growth of the economy. It is a vicious circle, not coming up funds from the economy to banks, from the different various sectors to banks, and because of not generating more credits, not in the industry, they are not able to provide further credits, and the acceleration has stopped, where you feel that particularly after 2008, because of the global slowdown in economy, more slowdown has caused. For 3-4 years we survived, but later on now we are feeling the pinches of the slowdown in the economy, which you must be aware, reading that most of industries, they are worried they are not getting the right amount of credit in their flow. Second biggest challenge is the reach of the banks to people. That is, including everyone in the banking fold. I'm not going to the statistics. Some economists say 50% of Indians are unbanked. Someone says it is 60%, some says it is 45%. I leave it to you. In your own circle where you live or where you work, you can find so many people who are still not connected to the bank, who don't know what the bank is, but they don't know how they can prosper, how they can take the financial benefit of the institution. We are privileged. We are living in a metropolitan. I have worked in that rural areas where reaching the branch in rainy days, I used to call for a small boat. You can think of what is going to be the banking facility, the utilization of the banking facilities by those poor villagers. Friends, if we have to take economy along, if we have to go for a long-term development of the economy, really going ahead as a social economy, we have to reach everyone. The fruits of the development has to reach everyone. This is the big challenge, and I request all of you, earnestly request you, if you get a chance to work in a rural area, please do work. You will have the real feel of the people, and you will feel that you are blessed that you are serving those people who are never being served as anywhere. Kindly don't stick yourself to the urban areas only. Wherever you get an opportunity, take a challenge, take a posting in a rural area. Then another challenge in the banking sector, which I feel as a practical banker is, yes, just in two points more. See, one question I will be asking you to find out whether in our financial system, do we have some policy mechanism how to correct the wrongdoing in the economy? Particularly, I talk about the banking sector. Because of the economic slowdown, the industries, they are not working in the right shape. They are not in the right financial discipline. There is no mechanism how to correct them, bring them back to the economic forum where they sustain, where they come alive. Find out. I will be very happy if you find some way how they can be taken out of this crisis. Deepak, just 1 minute I will put on. We have a high cost financing economy. Our deposit rates are high, our financing rates are high. That's why we have a hurdles. Globally, we are not competitive. Think over it, how we can make our economy as low cost, low base, low fund economy, where the cost of our products are competitive for international market as well as for our domestic consumption. Now, if Deepak come to the China, I had an opportunity to work 5 years in China. Friends, it was a wonderful experience, but a very shocking experience also. When I landed into China, I went to meet Chinese banks. First bank I meet, Industrial and Commercial Bank of China, ICBC. Then I met China Construction Bank. Then I met Bank of China. Then I met another Communication Bank of China. When I saw their balance sheets, I was shocked. Individual bank balance sheet was bigger than the entire Indian banking sector. Our Indian banking sector, our entire balance sheets of the all Indian banks were $1.35 trillion, whereas ICBC balance sheet was $1.75 trillion. And all other were $1.5 billion. That means individual bank of China is bigger than the entire Indian banking sector. This is how the economic difference is between both the countries. So other things are explained to you. When one single bank is bigger than the Indian banking sector, then the economic size and their reach is already, before you can very obviously see how it is. Second difference what I found in China and India, particularly in the banking sector, most of the banks are government-based banks. Most of the companies, they are government-driven companies, government-backed companies. So the funding is very easy to be obtained there in comparison to India. Number 3 difference. The biggest economic challenge in India is infrastructure development. हर आदमी हम में से कहता है हमारा इंफ्रास्ट्रक्चर बेकार है. Our roads, our beaches, our power, our airports, railway, water supply, health supply, education, everywhere we lack, everywhere we feel we should have more funds, we can put it in a better way. What was the reason and what is the reason at present why we are not able to develop the infrastructure is lack of funds. Our Indian economy, particularly the financial sector, they don't have enough funds to fund such a big projects because the requirement is very huge. We don't have such an infrastructure funding institutions. Government is not having sufficient funds. Banks are not very keen to fund for very long-term projects because the power project, road project, other projects, they require funding anything between 7 to 15 to 20 years. Banking sector don't have asset liability matched to that extent. Banks do not accept deposits for 20 years, 15 years. So we are very conservative in funding such a projects. Here all our top executives of the nation has to take a call how to bring funds for these big projects so that we go ahead with the infrastructure, because infrastructure is the key for all other developments. Third difference, Deepak, I saw in China was the recovery mechanism. Nobody dared to default there, which developed the confidence. Yes, prior to 2005, their banks were in mess. It was not basically normal economic losses to banks, because most of the government companies who were borrowers of the government banks, they changed their the processes, they changed their, rather they modernized, they put down the absolute factories which were borrowed, used by borrowed funds. The government simply swapped from one pocket to another pocket because the companies were government companies, banks were government banks, so they swapped all the bad debts on one platform and cleaned their balance sheets. But for an individual, for a corporate, it is very difficult to skip the bank, return of the bank money. Whereas in India, I cannot comment. Daily you read one or the other industrialist defaulting. Rather, 90% of the bad loans of the banks, they are contributed by less than 100 top business families. So it is not the poor person who is defaulter in the bank. This is the very big industrialists who are defaulter of the funds. Some strong mechanism has to be developed like China in India, where defaulters, they don't escape, because the rotation of the funds back into the hands of the banks is the only key factor to put more for utilization of the people, to develop the confidence of the banks and develop confidence of the financial sector to lend more and more. I just conclude with this, only saying that it is not a gone case. The financial sector will revive. It is only the proper leadership who can visualize the possibilities, how the possibilities are there to revive the financial sector. Thank you very much. Rest I will take in the questions.
Yeah, thank you, Joshi sir, for your enlightening deliberations and knowledge which you already possess. In fact, when I joined in 82, I was given a mentor, S.K. Joshi, just to wind up, close the Punjab National Bank London branches. So he really guided me. 8 years we worked in one branch, 2 years in another one, and every day we have been uh, talking, and all knowledge has been gathered. I'll share with you. In fact, to meet him, there is a branch called Zirakpur in Bijnor, UP. I went. He had a rural posting there. Another person whom he taken over is now the country head of advisor to HDFC Bank, GS Kharbanda. When he was there, he's the country head of HDFC Bank. So, my dear students, don't be afraid of the rural banking. It's an unbanked sector. Rural also has its own merits. You can't absolve from the unbankable areas. This was the part one of our Conventus topic. Part two and part three is yet to follow. And now part two would be the corporate financial inclusion. And the only thing which we are left into the banking, my dear students, is a little bit we take a lead from the banks, financial inclusion for the unbanked sector. That is the Modinomics, which is happening is JAM, JAM. J would be your Jandhan accounts which are going to be there. A would be the UID Aadhaar linked, and it has to be a process. M would be your mobile enabled. Believe me, ICICI Bank has opened a branch in an unbanked sector into Gujarat, and where all the lady farmers have been given this, and a pilot projects which has only thing is the seed funding is still left. I won't take you through the innovations, the e-technology, the e-KYC, which was talked earlier in the morning by our DG sir. Innovation, technology enabler, differentiator. Please add into this transformational differentiator, paradigm shift into the technology, which is there. Right from the morning, we are hovering on this topic. Now, coming to the last, which is left, is the women emancipation. Dr. Sharma has also touched about the microfinance. He has also touched about the financial income, Rashtra Mahila Kosh, and basically the NABARD schemes which are into the financial system. Now, taking into the lead, thank you, Zuchi sir, for enlightening us, Manoranjan Sharma sir. Now, that was the major lead 1 hour we have taken, because that concerned you right away, because you will be getting jobs into the various banks, and the prospective jobs are going to come. First year students are going to get straight away the SIP is going to come in for the banks. That is why I have not followed the 15-20 minutes time limit. But now, sir, as a moderator, I request you the second session, which is basically on the corporate, and a lead will be taken. I invite my next speaker would be R. Balachandran. He's an alum of IMI, and he's a partner and the national leader of E&Y. Sir, my question to you would be, coming from the corporate, you have traveled a lot. You have done a lot of alliances into the audits. So my question and my deliberation, would be guide our students about the cross-border relationships for the sustainability opportunities which are going to be there, and how the industry is faring as on today. I'm not talking into not the banking, but how the corporates are going to be faring, and the financial inclusion role into it. So, sir, some 10 minutes. Yeah. I'm taking the liberty to curtail your timing. But if you want to go, take more, your wish, sir. Welcome, sir. If you want to come here, it's okay. If you want to,
I'm fine here.
Yeah,
I'm fine here. Thank you, Professor Deepak, and hi, big hello to all of you. One thing that got missed out on the introduction was that I'm from IMI too. So there we are. So one amongst you. Thank you so much. Thank you so much. So tell me, how many of you all aspire to for a career in banking, insurance, financial services, and all out here? Wow, that's really a lot. So a lot of women out here too. So all the women can queue up at ICICI, Axis Bank, and Hong Kong Bank, and JP Morgan. And do you know why? They're all headed by women out here. So this is really exciting and great times. And the men folk are also kind of can't be left behind. We have Deutsche Bank out here. You know, just go here. They pay very well. Potential CEOs, Anshul Jain, all the way to Germany. So these are honestly, I feel that these are really exciting times for BFSI. There is so much happening. There is everywhere within our own firm. We have industry sectors, and FS is one of the big large verticals. So accounting firms traditionally in the olden times used to have audit, tax, and those kind of verticals, but now they're different. And the kind of verticals that we have now are more industry facing, industry led, and the one that does really well globally in our scheme of things is financial services. We just call it FS. That includes the whole gamut of banks, insurance, and all. Really interesting times, and I'm sure with all that's happening out here, the only one bad thing that I keep hearing about in banks is this kind of stressed assets. But other than that, just leave that alone, because that's something that the system is going to deal with. But other than that, in terms of prospects, in terms of where we are in a state of economy, again, if we go to focus and talk about India as such, I think we should be. This is a rocking kind of a sector. There is so much happening out here. Uh, in banks, I can see, and Professor Deepak spoke about inclusiveness with 22 crore new bank accounts. This is a real huge number. It transforms the whole landscape of banking. There is a lot that's going to happen. It'll open up a lot of jobs. And what kind of jobs will it open up? It'll open up kind of new, fresh thinking jobs, because they want technology to kind of drive all these kind of changes now. And that's really something big that's happening. And within the financial services sector, I think a whole lot of players, they spend a lot of time, energy in this space. They don't want to be doing things in the way things have been carried out all these years. Many reasons, and one of them is risk management. Even if you want to manage risks well, you're better off using technology. You're better off using digital kind of solutions than to try out things in the kind of old kind of traditional ways. So huge transformation happening out there. Whether it is banks. So banks is clearly, somebody gentleman just said that it's just 50% penetration. So if you're looking at the other 50% unbanked, so there'll be another 22 crores or something that'll open up. So I think all the banks will have to gear up. All the banks will have to kind of get in more people, more processes, more technologies, and to drive these initiatives forward. Let us look at insurance. That's even worse off. We have only 3% of this country who have an insurance policy today. Right? There is it's amazing. It's about 3.4% in all. Life insurance is about 2.6. So that's the kind of. So I've kind of been watching the insurance industry for a while. Things are supposed to happen dramatically, and there was a period of time. Even if you look at numbers, figures, and all, and if you look at CAGR growth and all those things, you would see mind-boggling 25-30% CAGR growth. Life insurance is growing this over a large period of time. Non-life would grow at something like 18%, 16%. So what then this throws up is opens up a huge amount of opportunities. Almost every foreign big player wants a piece of the action out here. So they will all want to come out here sooner than later. We will have rules and regulations. They'll have to grapple with all those things. But all that will happen. So there will be a cap on 26%, 49%. We can keep arguing what is good, what is not right for the country. But slowly and surely, things will open up. Things will kind of look up, and there'll be more insurance companies. And this 3% cannot remain 3% for a long time. The moment it goes up, you can imagine. As it is, I know that there's so many jobs which are doled out by these big large insurance companies, private sector players, as well as the public ones. If this 3% were to go to 6% and things like that, you can just imagine the number of kind of what kind of opportunities does it throw up. Not just that, then there would be a lot of innovation that's taking place also. Not just those kind of traditional jobs. There would be kind of people who would be entrepreneurs amongst you, who will develop probably an app to bring more people into this fold. And so that's all those are kind of things that would be happening. So this whole inclusiveness initiative itself will bring in more and more people into the fold, which will provide lots of opportunities for you all. what more can I say? Another thing that I noticed, I go to a lot of these, Bangalore, Chennai kind of places, and a huge amount of in Delhi, Bombay too. Almost every foreign bank, the number of people do they have that they have employed? I was talking to one foreign banker. They said they got 40,000 employees out here, and they hardly have. It's hardly visible. There's another one that has zero operations out here. Huge kind of building to themselves in Gurgaon. They have close to 18-20,000 employees in India. No, zero operations, zero lending, lease, zero deposits, zero everything. There were 20,000 jobs in India. So that's the kind of power of the Indian brain, Indian mind. And so Indians are traditionally, I think, everywhere we are considered to be good at numbers, good at number crunching, finance, accounts, debit credit processes, some amount of discipline. So I think just build on those kind of strengths that you all have. Huge kind of doors that'll open up for all of us. What else, Deepak ji? You said inclusive growth across border. Yeah, I guess there would be a lot of stress in other parts of the world, but really don't let that concern you at all. India is kind of really rocking. CSR and sustainability, big, huge. There's lots of talk on that. I read some figures and facts and figures and all. This whole thing will grow only when the country grows, only when the sector itself grows. Once the sector grows, there's more money lying in insurance companies, and these insurance companies will drive investments into these sustainability areas, which are difficult to find funding. So it all augurs well for you guys. I think I tell you, good choice. Lots of things happening, lots of interesting times, and I just wish you all very well.
Thank you, Bala sir. You feel very proud that some alum on the top brass. And when I was surfing the net last night, looking into his PDF file of a research paper, he specializes into IFRS, that to the banking sector, which is going to come. And the government has already adopted the model. So we are proud of you, sir. And anytime it's your alma mater, you can always come back to us. And to take this more forward now, I'll just ask another alum. Right? He's from Deutsche Bank. Vimal, he's a banker, but a lot of banking has been done. But what he has done is lot of syndicated loans he has done, lot of power projects he has done during his. And what I feel is that infrastructure financing, we are into now renewable energy rather than the thermal power. So that area, sir, if you can highlight and tell our students your key thoughts about it, your deliberations, how we should go forward for a sustainability into the thermal power. So I give you now 10 minutes, is okay? 10 to 15, yeah, your choice. The panelist and Akash and Jigya, we will be able to finish max by 5:15, 5 to 5:15, right?
Is this now on? Yeah, perfect. Yeah. No, it's good. It's good, right? Perfect. It's really incredible to be back here. Yeah. The last time I was in this room, there was another eminent Sardar speaker here. His name was Montek Singh. And I'm happy that IMI continues its tradition of calling eminent Sardar speakers. Right. I wanted to say one more thing before I begin on this one, and I would like to keep it interactive because although I'm sitting here, mentally I'm still there. These views that I share with you today will be my own, although they will be tinged with the experience that I've gained with the number of banks that I've worked for and the corporates. So let me kind of start with the fact that life is full of paradoxes. One of the paradoxes that most of you will face is that the weakest students will soon be bosses of yours. They'll be doing the best. and that doesn't incentivize you to not perform, but that is the that is the reality. Right? Financing world is in itself also a paradox. Yeah. One reason that I say that is that if any of you go out today and ask for a loan for, and I'm assuming you'll be budding entrepreneurs, some of you, and you want to follow that passion of yours, you will find that banks will price it at the top end of the curve. Yeah, and 20 years down the line, when you're relatively successful and not just an entrepreneur but a businessman with long acumen, you will find that banks will run after you pricing at the bottom. So what it means is that when you need the money, it's expensive. When you relatively don't, it's not. There's a good reason for that. There is not. It's not unintelligent. It's not sensible. It is extremely sensible. But that is the paradox. Now, I'm going to focus on the sustainability aspect of this. Okay, so what do you think in terms of financing? If financing is itself a paradox, and on top of that you throw this phrase called sustainable, what do you think happens? Open question, one answer. I'm going to go for the girls first because they seem to be winning the most medals. Which one of you? Any lady here who wants to answer? What happens when you throw a paradox and you enter it with a sustainable phrase before it? Anyone? No. Okay. Let me kind of jump in here. It becomes even more terrible to fund. Okay. I'm going to focus on the energy sector. In the energy sector, in about 2005, I recall, renewable energy really came on its own, and renewable energy financing became a buzzword. Does anyone here know what is the cost of conventional coal production per unit on a rupee basis? Anyone here? I'll feed you the figures, but just wanted to check. Yeah. No, that's not conventional coal. That's what's more renewable. Okay, so coal is about 2 rupees 50 paisa a unit. Yeah. Wind is about 3 rupees 50 paisa a unit. Solar is between 4 to 6 rupees a unit. Now, all of you put your banking hats on. You know, you're all bankers. You work for various banks. You have a proposal that comes to you. One is from a conventional coal company which says it will sell power at 2 rupees 50 paisa a unit to the same buyers. And the other is a renewable company which says I will sell it 4 rupees a unit. Which one will you back? So where is the model of financing then? So that is the conundrum that faces Indian banking, international banking, and sustainable energy. I'm again taking you back to 2005. Why did this sector pick up? And since the theme of the finance club is sustainable energy, I'm going to stay here and focus here. Tell me, the dynamics have actually improved. This gap between conventional and renewable has actually come down. At the time in 2005, it was wider. So why did it pick up? Who has the knowledge from the time that maybe they were in 6th or 7th grade about renewable energy? Anyone? 2005. Why did conventional energy take a back seat? Why did renewable energy pick up? Ladies. Okay, guys, your turn. Anyone? No. It happened because of policy, right? So this is the second stream of thought I want you bankers to start thinking of is when things